Hello traders, welcome to Forex Mechanics. In this video, we are going to be discussing about risk on and risk off. Now, before we proceed, I would request you to please subscribe to the channel and watch this video till the end because I will be sharing a little cheat sheet with you guys towards the end of the video, which will help you understand more about risk on and risk off. So let's begin. Now, before we even start, what do you mean by risk on and risk off? It's pretty self-explanatory actually. When you say risk on, it simply means that investors or traders are willing to take more risk. And on the contrary, when you say risk is off, it simply means that investors or traders are not very upbeat about the markets and are not willing to take more risk, right? So typically, like I mentioned, traders and investors are not really willing to take on more risk if it is risk off, and they are willing to take more risk when the risk is on. So in general terms, when you understand risk on, even if you have to look at the markets overall, so we have the stock market, we have the currency market, we have bond market. There are so many different markets, right? So when risk is on, investors are generally more optimistic and they are willing to take more risk. Now, when I say willing to take more risk, simply means that they are willing to invest their money or take more risky bets. Typically, that would be the stock market, right? So, stock market is something that comes with a lot of risk. So, investors, when the markets are in a risk-on situation, are willing to take more risk. Now, when you talk about the forex market, typically it's the Australian dollar and the New Zealand dollar, which are commodity currencies, and these are considered to be, when you talk about currencies, so whenever the market is risk on, you will have these commodity currencies like AUD, NSD, and the CAD, which are rising in value. Now, we will discuss more about this towards the end of the video because I've made this little cheat sheet that you can follow, and that will help you understand a little bit more about risk on and risk off. So when is market risk off? Now, like I told you, again, here, typically the investors are pessimistic. They don't really want to take more risk. And when a situation like this happens, you will see that the investors will not be investing maybe in the stock market. They will be looking at investing in the bond market or something which is less risky, right? So if you look at the year 2022, I'm recording this video in 2022, and we all know what is happening, in 2022 since the start of the year. The stock markets have been falling. So when you say the stock markets are falling, it simply means that generally traders and investors are not really willing to put their money in stock market. So in a situation like this, they will be investing in less risky assets, right? So currently what you have in 2022, at least in the first 6 months, is more of a risk off situation. And you would have generally seen that the AUD is falling, the NSD is falling, and on the contrary, you would have seen that the dollar is rising in value. Like I mentioned, in the next slide, we will talk a little bit about it. So this is a very simple sheet that I have, which tells you about risk on and risk off, right? So basically what you are looking at is the flow of money. All you try to understand here is where is the money going. So typically in a risk on environment, like we understood, the money is flowing into riskier assets. And when the risk is off, the money will move from riskier assets and move into something which is less risky, right? So if we look at a general situation right now, so we can see here we have risk on and risk off, and these are the different asset types, right? And we will talk about this right at the end. Here we have something that I have for the currency market, which we will talk about in the end. So VIX is the volatility index. So when the risk is on, typically you would see the stock market is rising. So if you'd have seen after COVID, so in 2021 we had this nice bull run that happened where stocks just continuously were rising in value, which means that the investors and traders were very upbeat about the market. So they were willing to take more risk. They're willing to invest their money in risky assets. So typically they will want to invest their money in the stock market. And again, when stocks are rising in value, there's the general understanding that when risk is on, when stock market is rising, then you will see that the gold and the silver is falling in value. The same way, if you look at the reverse, when stock market is falling, you will see that the gold and the silver will be rising in value. I think I missed the arrow here. I will add it as well. So you will see it rising in value. Now, what you need to understand in the sheet is just now this is not like an holy grail, but this is very important for you to understand that where is the money flowing in the current situation. Now, since I'm trading more in the forex market, I will look at the currency part of it. But again, if you in generally understand that what is the market doing, and in simple terms, even if you simply track the stock market or you track the S&P 500 for that matter, you will get a very general understanding of what the market is doing. So like I told you, this is the year 2022 and the stock markets are falling. Now because the stock market is falling, you know, generally you would have seen, you will see that, investors are willing to put their money in the bond market or something which is less risky, right? So the stock market is one of the best gauge to understand whether the markets are, going up, which is risk on, or falling, which is risk off, right? Now when I look at the currency market, now like I told you that the Australian dollar and the New Zealand dollar are risk on currencies. So whenever you see, generally when the market is very upbeat, the stock market is rising, uh, generally there is a good a good environment, right? A good global economic situation. You will see that the commodity currencies, especially here in the forex market, we're talking about the Australian dollar and the New Zealand dollar, they will be rising in value, right? And same way we have risk off currencies, which is like the yen and the CHF. So these will be falling in value. So that's the reason why, as a trader, even if you're tracking the Australian dollar yen, the odd yen, and the NSD yen, that also gives you a good indicator of what the market is doing right now, right? So typically, if you are tracking these currencies here, which is the AUDN, NSDN, AUD Swiss franc, NSD Swiss franc, AUD USD, NSD USD. So on days when you see these currencies are rising, right? When you see these six currencies are rising in value, all of them are rising in value, it simply means that the risk is on, right? So this is a very good day for you to buy these currency pairs. Similarly, if the risk is off, you would typically see these currencies are falling in value. So when you see these currencies falling in value, it is safe to assume that the markets are, you know, uh, in risk off situation. So selling these currency pairs would make more sense. Now, what you could do as a you could try this on your own. What you could do is you could open any website. So typically you could use maybe TradingView, or you could use bar chart or investing, any website which allows you to create a watch list. So you can simply have a watch list of these six currencies, right, along with the S&P 500. So if you have a simple watch list of these six currencies with the S&P 500, and when you see that, these when you see a risk on situation, right? When you see these currencies are rising in value on a given specific day, you will see that, currencies are rising, or you see these six currencies rising. It'll be safe to assume that that's a good trading day, and you will see a good flow of the money in the market. You can try it out yourself, because once you look at these situations on your own is when you will be in a better position to understand risk on and risk off. Specifically when you look at the currency market, this makes a lot of sense. So here you can see on TradingView, I have here, right? So these are the six currencies that I'm talking about, right? And I have the volatility index and the SPX. So even if I simply have the VIX, and these are the six currencies I'm talking about, just looking at these six currencies, I know that there is not much happening in the market, because you can see here, when you look at the percent change, there is not much percent change. And firstly, you can see here the NSE CHF is in a negative territory. I mean, if the risk is on, then I would want to see these six currencies right from the start of the day. You will see a lot of buying happening in these six currencies. And by the time you have the UK session open, you would see a significant um, change that has happened in the six currency pairs. And in a risk on situation, you would have these six currencies moving up and the VIX is moving down. And in a risk-off situation, it would be the vice versa, where these six currencies are falling in value, and this would be rising, right? So just by tracking these six currency pairs, also you can get a very uh, a significant idea of what is happening in the market. So right now, if you see, there is nothing much happening. And currently, I'm looking at this in the UK session, and it's very clear that just by looking at it, there is not much happening in the market at the moment. So, like I told you, there is no holy grail, but from the forex perspective, if you track these six currencies, right, and especially because the way these currencies are correlated with each other, once you start tracking these six currencies, just track them for the next 15-20 days, and you will understand what I'm trying to tell you. Okay, so you can use this as a guide. It's not necessary that all of them fall into place, but I have seen that in general, this is how this is how the markets behave. And like I told you, from a currency perspective, if you have a watch list for this six currencies along with the VIX, then you will get a very clear idea that how the market has moved. Like I told you, uh, if you track this for the next 15-20 days, especially the watch list that I showed you, and I've made it on TradingView, you can access any website. I think you have watch list options in investing, even on barchart.com. So you can open any website and create this watch list and start observing them every day. And slowly you will see it will start making sense that whenever you see some of the cleanest moves that happen in the forex market, or when there is a lot of volume, everything, the trends are good. And I'm talking even on an intraday basis. So the days when the markets are just great, you must have observed a lot of times that you just buy a currency pair and just it automatically just starts going into profit. Typically you would see that that would have been a risk on day, and on the vice versa, when you would have sold certain currency pairs, and you would have seen that it just goes into profit. I mean, within like a few minutes or within a couple of hours, you see massive profits happening. That is because there is a shift in the flow of money, and this is something that you will have to learn on your own, or you'll have to start observing on your own. And you will see that once you track this for the next 15-20 days, you will slowly understand what I'm talking about. And since I'm looking at forex, or I'm trading forex, so I tend to look at these six currencies along with the VIX. And like I told you here, when these six currencies are moving up and the VIX is moving down, and I see a significant change in the market right from the Asian session moving into the UK session, that gives me some indication that yes, the markets are going to be risk on. So if I'm looking at maybe trading the AUDN or the NSDN, of course I combine this with the currency strength and weakness. I check it with the currency strength meter that I personally use, and if the risk on situation is matching with the CSM, then typically those are really good days for you to take trades and make some quick pips in the market. Okay, so I hope you like this video. Please like the video, share it with your friends, and like I told you, please subscribe to the channel. And you can use, maybe you could take a screenshot of this video and refer to this. Like I told you, uh, just try it for another 15-20 days, and you will understand slowly and steadily what I mean by risk on and risk off. I hope you enjoyed this video. I'll see you in the next video. Thanks. Bye bye.